Okay, hello everyone and welcome to this live intraday strategy webinar. Today is Wednesday, March 25th. Michael Boutros here with you guys. We just got the release of durable goods coming in weaker than expected across the board. Here's what the print looks like. We're looking for a print of 0.2% coming in at negative 1.4. Downward revision from the previous read from 2.8 down to 2.0. Did pressure the dollar right now. We are seeing some dollar pull off, euro going through 110. Good to be with you here this morning. Just want to get that data right out the window. Lots of trades to discuss as always. Feel free to throw out any questions, trade setups you guys are looking at as well. Be more than happy to look at some on-the-fly analysis. Let's jump right in. So the focus to start off the session, guys, you might have seen some tweets from me and Jamie last night. This is the dollar index, major key support continuing to be tested here. This dates back to the lows that you made back in July. Again, that nice support range has caught every major correction on this rally since. We're testing this right now. Now, for me, or for the scalp side of things, guys, the bullish invalidation level is still just lower. You do get these drifts and peaks and tests of major key levels, so we're not going to make any major assumptions until we clear this, but certainly on a downside break here, guys, you can imagine the scenario that we've been looking at. So today's price action obviously will be critical here on the close if we do push below the bottom range of that support barrier. That being said, the dollar crosses again are in focus as we start off the week. If you check out the intraday page, obviously the sterling crosses have been a very nice play recently. A little tricky down here at the lows as we continue to bounce sterling yen, sterling Aus, sterling CAD, all finding some support at some major key levels that we've been looking at, guys. Now that bounce in some scenarios is coming right into resistance, and in some scenarios has broken through the invalidation level. So we'll take a look at those trades as well. First things first, euro dollar. So I'm trying to keep the charts on the page as long as I can, guys, so you can kind of go through the progression of the trade. Here's what the daily looks like. That's going to be updated, obviously, each session. But if you click to the right, you can kind of go through the week and see how the trade's been panning out. So obviously, on the euro pullback, we were looking for 107.46. That tagged on that pull. We rebounded right off that median line, went right through those topside objectives. 109.72, 109.94 was the near-term bearish invalidation level. And although yesterday during the webinar, guys, we popped right through on that release of CPI, it came right back. And in fact, on the swing side of things, just missed the stop. Now today, obviously, we're making a larger move through this. So if you were still on the short side of things, we're making it through. Essentially, we're going for the highs here, which is still 110.28, 110.27, major key resistance 110.36, guys, into 110.39. That's the stretch high for FOMC and a 100% extension off the low. So we're not clearing free for a rally through into the highs, into 111 or anything just yet. This is going to be the focus here as we head into the U.S. session. Hey, Eileen, Petro, Philippe, Jay, Mark, great to see you all this morning. So for the euro, here's what I'm thinking. I'm looking for the U.S. session, just to go through the scalp here. Here was last night's post, okay? So we were trading right around that 109.15 level. This is the near-term bearish invalidation. So you came right into it, found some resistance, momentum broke through 60 on a trigger break here, and obviously it's a 4-point trigger, topside break. This took you through the European opening range high. Near term, you're looking for support at 109.70, but that is a topside scalp bias now. For the U.S. session, you could see this thing continue to fizzle out. Look at the daily chart. So this is a big region of resistance. Aside from the fact that it's a simple 50% retracement of the February decline, okay, you also have that 618 extension off the low, which is right in that region as well. We popped right through that just at 110. So I wouldn't put it past this thing, guys. Obviously, the data that we just got for the U.S. pretty weak as far as durable goods orders. We were expecting a weak print, coming out a little bit weaker than expected. But we'll see if that's enough to really prompt the dollar reversal and break through support. Philippe says, where was a trigger? There was a trigger, but wasn't it a bad trade because it was right near the resistance? Yeah, absolutely, Philip. I didn't take it. You're absolutely right. So basically what Philip is saying, there is a trigger right here, right, that gave out that we just talked about. But would I take that because it's right into a resistance range? No, this is not what I want to take. But, Philip, if you're holding shorts, If you're looking for new positioning, it would prompt me to step back. Guys, a trigger doesn't always need to prompt action, right? Triggers can prompt non-action. If you want to operate on a position and a trigger gives out in the opposite direction, whoa, 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 okay, let's take a step back. That's not something I want to get involved with. So every time I say trigger, it doesn't necessarily mean I'm prompting a new position. It could be, okay, putting me on the sidelines. I'm still looking for shorts, guys. In fact, on this spread, I was just about to jump into short position before this webinar on that release. I didn't want to jump the gun, but I do think this is a great risk to reward. There's nothing wrong with taking a stop against, last week's high. If we have another stretch here into the highs before the open, taking a stop against 1039 and trying to see a move to the downside. Here's what the intraday chart looks like. Okay, here's what a 5-minute chart looks like for the euro dollar. Keep things all in tandem here. And you can see we're still putting in some divergence into the highs, right? We're still putting in some divergence into the highs. Price action, much higher high. The oscillator, equal highs. That is divergence. Remember, when we're looking for divergence, and by the way, the trigger is about to give out. We'll see if we can time this nicely here with another bounce to get back in. But when you're looking for divergence, guys, it doesn't necessarily need to be price action, higher high, oscillator, lower high, okay? You can have a scenario where, oh, I lost my chart. Sorry, guys, one sec. What? Sorry about that. It doesn't necessarily need to be price action, higher high, oscillator, lower high, an equal high in the oscillator. All you're looking for is that this is not confirming an extreme in price, and that's exactly what this is. It's a new extreme, a fresh high. You're not seeing that mirrored here. So on this account, I still give credence to that support barrier right there. We're at 89, stop at 110.35. We'll see if we can get a little bit higher, but I do like the short side for the euro against that major key resistance region that we just talked about. Listen, at the end of the day, if this thing pops 10.35, you're going to get a nice rally out of it. You're going to get a nice rally out of it. The daily doesn't have anything until like 110.95, and on the scalp basis, you're looking for you're still basically looking for 110.95. It's not even on here. Let me add it on. If this breaks, again, I don't. We'll have to see how the U.S. opening range looks. And in fact, if we bring back that 2-minute chart or that 5-minute chart, I'm sorry, guys, my computer's acting up a little bit here today. If we bring back this chart, right, you can see the U.S. opening range setting up pretty nice. So high 110.14, low 109.80. If we do take a short trigger, if we make it back into a decent level here, we'll take a stop. The break below 110.80. That gives you the conviction to hold that position on the short side. Philip, does that help? Guys, does that walkthrough just give you a quick picture sort of the game plan here moving into the U.S. session? Levels are all mapped out on the intraday page. There's no change to any of these targets here moving into U.S. On the flip side of that, so we have a game plan moving forward, right? If momentum makes it through 70, okay, and you make it through the highs on a closed candle basis, you're done. Endo, combo, right? No more. We're not going to sit here and fight an uptrend that's calling highs. That's exactly what you don't want to do. So I think this one is going to set up nicely here for the U.S. session. Philip says, yes, sure. How do you recognize what's the U.S. opening range? I mean, if you wait another hour, the range might be wider. Right, so Philip, for me, typically, I'm looking at like the 8:30, 9:30 open, right? The U.S. futures markets open up at 8:30, 9:30 cash markets open up. Typically, sometimes that hour will give you a range. Sometimes it needs to go into 9:30. It depends. Philip, I talk about this all the time when we're talking about opening ranges. I don't want you to stress the time per se. I want you to stress price action. It doesn't matter if, an 8:30 to 9 o'clock range sets up real nice. We make a high, we bounce off the low, we test the high, we bounce off the low. I'll be happy using that range. If we slide into an 8:45 low and then into 9:30, we test that high, that's an opening range for me. You're looking for the market to set a low, set a high, and then test one of those sides. So if we're rallying, we set a high, then we pull back to a low, we test the high again, that's the opening range. If we're coming down, we're into the opening range, we bounce, we set a high within the first hour, and then we test the low again, that's the opening range. So don't stress necessarily the time. It could be an hour, it could be an hour 45. Markets aren't in a vacuum, guys, and no strategy is going to be clear-cut, black and white, here's what you follow, right? We're adapting as price action is developing. So if it takes an hour, so be it. If it takes an hour and a half, 2 hours, the market's setting a high and low and it's holding that range, wait for that break, right? Philippe, it's not going to work 100% of the time, man. Sometimes you'll get a print. Okay, looks like the euro doesn't want to give us that entry a little bit higher up. So I'm going to take a stab at this here and just try to hold that short. We'll see if we can get a move below this little near-term position here. Stop is against the high. We'll press that just a little bit higher. And we'll see how that pans out as you open up the U.S. trade. Good risk to reward, guys. At the end of the day, if the trigger gives out, I think it's going to be a nice move here. So worth the shot, definitely from that standpoint. Remember, 43 pips is a quarter of the daily ATR, so that's what you're looking at for that. Philippe says, all right, so you want to see how price acts for a period of time. Exactly. That's probably the best description of it, Philip, right? We want to see the market set a quick range. If the range breaks to the downside, short against the highs, range breaks to the upside, we're long against the lows. Cool? Eileen says, would you still jump in if it doesn't retrace but continues up and down where you entered? Again, this is just a probability trade, guys, right? Because the risk to reward is very favorable here. And because of the divergence that we see hold again, it might be worth, it might be, again, for me, I'll take a stab like that any time of day. Remember, divergence into a trigger high, into a trigger break, 9 times out of 10 I'll take this. We did just front run it, but you know, we were right there at support, so we'll know pretty quick if this is going to give us the play. All right? Questions on euro dollar before we move on? Eileen says, where are you targeting? So on the initial stretch, obviously, Eileen, the first thing we're looking at is our volatility expectation. So we're looking for about 40 pips, right? On a downside support, the first thing I would look for is a break of the... Okay, just want to see where the European lows come in. European lows comes in at 109.06. That's an 80 pip scalp. We're not going to run with that. So listen, objectively, Eileen, the initial target is going to be the lows. Objectively, it should be the 109 level. But on the basis of the fact that we've run this level here, you know what? It just doesn't want to toggle between my screens. In any event, here is a quick target. I mean, the first thing I would do is take a quick retracement off the lows here. 50 takes you into 109.60, 618 takes you into 109.50. So this is the first range of support. You know, it's not the European low. The European low is still 109, but I'd be looking take off a quarter at 109.50, 109.60 as we dip into here. I'd bring my stops to break even, and then we'll see if we can make it into the 109 handle. Remember, the short side of the scalp or the swing setups, they're still in play here, so we haven't necessarily deviated from any of that. We're just taking a nice scalp here on a break of this near-term target. Questions on the euro, on the entry, on any questions in general, guys? Eileen says 109.47 is the daily pivot. That's when pivots start to matter, Eileen, right? When they line up with our near-term targets, for sure. So, amen. I mean, I love to hear that. Even though I'm not someone who religiously follows pivots, anytime a pivot's coming in on a level I'm looking at adds extra technical significance. All right, let's move on. So that's the euro dollar. We'll track that one as we go through. Again, if we get into 109.47, guys, we're going to go ahead and take off a quarter of that trade. We'll see how momentum is reacting. If you get a 40 hold in momentum here on the intraday, it might be worth it to take half the trade off and just take your stops to break even. Remember, the reason it's a little bit more likely for us to try to fade this move is just because of where the index is. It's a major key support barrier. You're likely to get some dilly-dally here, maybe even another recovery before you break down, but dollar at support, euro at resistance, good risk to reward there. All right, sterling CAD coming right up. Sorry guys, bear with me 1 second. It just doesn't want to let me toggle this. Okay. So for the sterling CAD setup, we came into the 50% retracement, which was a larger retracement of the entire November advance. That was at 185.46. Had some divergence into the low, price action lower low, oscillator higher low, trigger break, shifted the focus to the upside. I didn't play that trigger break, guys, but I did note last night that this is the same level, the 86.68 level, is now the bearish invalidation. So you expect to see a little bit of a bounce here. If we had broken this level, this major key support slope range, and then you saw it come back, tested as resistance, and break back to the downside, that would have been a clear-cut conviction break, and you look to maintain that downside bias below 86.68. Here is what sterling CAD looks like right now. Where are you, sterling CAD? Okay, so it's exactly what we're doing. Okay, there's that key support barrier, 85.46. There was the trigger last night we talked about in the report. Came right into former support, resistance, seeing a little bit of a turnaround here. So I didn't really have any plays here, guys. This is a wider range scalp, so the implications of a stop are still going to be 43 pips, 40 pips. A little bit hurt, a little bit more, sting a little more than a euro scalp or not even a euro scalp, a Kiwi scalp or something. Long story short, this was the range target that any longs would want to get out. So at this point, your longs are back at risk. You're looking lower, below 86.68. If we break through 87, remember that's the bearish invalidation level, especially if we coincide with this trend line. Remember early in the week what we talked about, right? Compression, compression, compression. These trades are trades that it's worth waiting it out a little bit, but when you get the break, typically it makes a nice run. This was a beautiful run yesterday. We talked about this during the webinar. It had already broken when we were doing our webinar yesterday. We talked about 85.46 being the next downside target, and that's sort of where we found a major low here at this point. That being said, 86.68 is still your bearish invalidation level. So we're back below it. Momentum, quick stab above 60, right back below it. If you break that momentum trigger and you make it back the underbelly of this support range, you look to maintain that downside bias. The reason I'm scared of sterling CAD, or the reason I'm a little shook here on sterling CAD of getting aggressive, we were playing this a little bit more healthily on the downside. Look at the daily chart, guys. It's a major, major support, 50% retracement. You've seen pivots at these levels before. If you go all the way back, it's actually a very nice pivot with the highs that you made in the latter part of 2014. So a little cautious. But that being said, objectively, support break, test as resistance. As long as you stay sub 87, you look lower here in sterling CAD. Questions on sterling CAD? The other reason I was a little concerned is because look where momentum bounced yesterday. I don't know, guys. We've been looking at this trigger for weeks. I don't know if you want to call that a break. I don't know if you want to call that reversal. It's just not enough conviction for me to get involved on a broader trade. In fact, on a move like this, I feel like this is classic fake out. You're going to head right back into the median line, probe through, maybe surpass 87 real quick, and then slam right back down to the downside. This pair is notorious for doing these types of jackknife moves. So just use some caution. We're getting a little gutsy on the scalps here, guys, but the plays are there. I mean, they're playing out. We just gotta, suck it up, bite the bullet, and stick with our strategy here. So looking lower in sterling CAD below 86.68. That's the level I'll use as my near-term bearish invalidation. A break of the lows. The levels are all highlighted on that chart, but you're basically looking for 87.78. Nice healthy stretch. This is actually just 100% extension of that last bounce we had off the lows there. And then this is a longer dated 2618 extension, or excuse me, 100% extension, mistaken, off the highs that we made February. That takes you into 84.33. So levels are pretty clear. Again, if you take a look at the broader structure, guys, I mean, if this is the legit break of this formation, of these parallels that we've seen, this could just be the onset of something a little bit more significant. With our bearish invalidation, like I said, at the 87 handle, let me highlight that for you here, heading into the U.S. session, this is what I'd be looking at, guys. A break or topside pop through that is going to be the real game changer if you see this thing give out, okay? That's a basic trend line resistance off the highs, but it is a 3-point. So you can see a scenario where maybe it pops through here, and then you get another jackknife to the downside. Long story short, if you break, those downside targets are nice in view. Questions on Sterling CAD? Philip says, from 3 similar setups as we had yesterday, Sterling CAD, Sterling Oz, Sterling Key, Sterling Yen, those are 4. He says, how do you recognize which pair is the best to play that day? Philippe, you don't know beforehand. I take every trade on its own merits, so it's got to be based on the triggers that we're seeing and where price action is on that position. The other thing I want to note is keep your eye on the economic calendar. Know what kind of data is coming out. So, for example, all of those trades were at risk yesterday heading into the UK CPI release, right? A little softer than expected. You saw this sterling drop down, but still a little stickiness in those core prices, which is, again, the BOE's primary mandate is price stability. So you don't necessarily know ahead of time. You have to have that's why we map out the levels and we present the setup as it is. And then if the market triggers, you know, the stronger, the more compelling of the trigger is going to be the one that I'll take. Does that make sense, Philippe? For me, on the side here, it's just all about the technical setup. That's it. If the levels are clear and the market has clear structure to the slope path that we're in, that's a trade I'm looking at. As far as which one of the 3 or 4 that I'm looking at, that's going to be best suited on a case session-to-session basis. So, for example, Philippe, this one probably not going to be on the menu for me heading into the U.S. Why? Because the U.S. opening range is already massive, right? You know, if you look at something like British pound or something that has a little bit tighter of a U.S. opening range, here's the 830 candle. Maybe this sets up the U.S. opening range right below resistance and the opening range high for the week. That might give you a downside trigger. So it all depends on, you know, the setup, and this is why it's a very near-term strategy, right, guys? We're scalping, so we want to be attentive to what the near-term price action is saying. Not the first trigger. Philip's asking, so it's the first trigger is the better one? Not necessarily the first one. The clearest trigger, the most compelling trigger. So, for example, again, you know, if you just bring in, you know, the euro-dollar position, right? Divergence into a trigger break. We talk about this like every single day, right? Price action's a higher high. Oscillator didn't. Now you have a trigger to the downside. That's a compelling position. So yeah, I'm looking at Sterling CAD, looking at Sterling Oz, looking at Sterling Yen, but I have a pretty compelling divergence into trigger break. I'll take that. Let's look at Sterling CAD. Didn't really get a major trigger as far as divergence is concerned. I don't like taking trigger breaks above 70. So I know probably some of you who, you know, have been following this one, maybe been looking at something like this. Not the most compelling. Remember, something can stay above 70 for an indefinite time period. I don't even like divergence above 70, guys. It doesn't mean much to me. In fact, if you take a look back through my years of trading, the divergence signal, the closer those signals are to the 50 median, typically the stronger the trade, the stronger the signal is. So if you were to get to divergence into here and then a trigger breakdown in the 50, 60 range, that's a much more compelling trigger than divergence in the 70s. Does that make sense? So we will see. Philippe's saying out. Okay, I see. Thanks. Yeah, you're more than welcome on that. So we will take the triggers as we see them come based on the opening ranges for each session. So we'll see the euro. It's likely to give you some play here, guys, and bounce around a little bit. Again, it's a pretty tight stop, so we'll see if we have enough to push through the underbelly. All right, so that was Sterling CAD. Moving right along, we are also following here Sterling Oz. And this got hung up on a trend line here on the daily chart. We got the rebound right back into the 89 handle, or just shy of, or excuse me, 89.50, just shy of here. And the focus is very similar to what we're looking at here on Sterling CAD. Here's what Sterling Oz looks like in the near term. Sterling Oz, Sterling Oz, Sterling Oz. Boom. Okay. Someone's asking, is there anything interesting going on? I assume you're talking because the euro is rallying through, right? So it looks like we're going to try to press those highs again. I don't see any comments coming through. There is a comment saying that Greece may need negative shock to come back from the brink. And then there's another comment from Steinmeier saying that he's optimistic in progress. I mean, there's nothing here. Guys, I don't follow the markets on a comment-to-comment basis, especially with all the fundies going on. It's just, you know, it's ridiculous sometimes. I don't even want to, like, focus on it because it's just noise. So, listen, let the trade pan out. We're against the London high. If it does break through, again, watch for that region into 110.39, 110.36. It might be another opportunity. I don't know. Maybe we jumped the gun a little bit because we still have a little room here to press into 70 on the momentum. But we got to stick to our guns on that one. We'll let it play out. Sterling Oz, back on topic. Sorry, I keep jumping around here. There's that major trend line that we highlighted both on the daily chart and on the intraday chart. And that's exactly where we bottomed. So the shorts are at risk above this region. And on the daily chart, you have some major levels there as well. So here's a key support slope range. Caught the lows in November, caught the lows in January, and here we are again. Okay, a sliding parallel off that slope from the lows from September gives us a little bit more room to the downside, which is why, again, we don't want to be the guys trying to call the low. That's not how we trade. But right now you want to be watch out. If you're taking the short side of the trade, you want to watch out into this region. I wouldn't put it past this thing to drop into 87.50 to complete a 261876 confluence here before we make a near-term rebound. That being said, you know, I'm going to reserve this region near-term as key support. So the way you want to play it is, obviously, I don't know if it's going to get that final drop, but we got a clear-cut range to play with here. Okay, that same slope, former support, now acting as resistance. This is what was highlighted yesterday, that key region. If we pop through that, that's your bearish invalidation level. Go ahead and play the recovery into 90.70 as the initial target. And then this median line off, you know, the highs comes just around that region heading into Europe tonight. If U.S. opening range holds, or, you know, I'm not really interested necessarily in trying to fade the move. We'll see if we get a compelling trigger. Momentum is holding 60. That's a good thing. But if you get a downside break, you know, even if you take a short, guys, it's a 55 pips scalp. That trend line is still not till 88.60. So you still got almost 50 pips to the downside if we press into here and you get a compelling short trigger. That being said, you know, again, a blast through here, you're basically looking for a rally right into the 190.70. Okay? There was actually a long trigger last night, and it was right here highlighted in the report, guys. Do you see this? Okay? It turned out to be a 3-point trigger. So you had 1 test, 2 tests, 3 tests, pullback. The breakthrough was a break of the Asia opening range high. Okay, 88.80. Stop against the Asia low, 88.50, 30 pip stop, looking for 50 pips. You're well in that range already. So watch this resistance heading into the U.S. Again, near-term bearish invalidation, a break of the lows, and you're looking for that drop into key support, and that takes you into 87.40, 87.55. Again, a quick look at the updated scale charts, and on the intraday page, guys, I'm trying to archive just the scale charts so you guys can see how this how the trade panned out. We opened up the week up against support 91.40. That was the break that would set it off. 91.40 gave out. You got that major drop right into key support. This is where we were expecting a little bit more of a rebound. Turned out to be a dead cat bounce. Quick little pop up. Quickly failed and crashed right through into that trend line, right? So now the focus is the bounce into this region. We got that bounce into this region. If this holds, break of the low, you look for that drop into 87.50. Okay, break of the highs, you look for the recovery back into 190.70. Questions? Karam, if you're in the room, I just saw you tweet. Jamie's around. These not many tweets from him since yesterday. I told you guys yesterday, actually, Jamie is traveling, but he will have his swing updates every day. And again, we will give you an update later today, guys, on when he'll do his midweek strategy webinar. But do bear with us. There's going to be a little bit lighter of a squawk feed just for the next couple of days to give Jamie a nice little break. I'll try to keep you updated for sure throughout the course of the day on the major trades that we're following here, but just a quick side note there. Anthony, great to see you in the room, sir. Any questions on sterling Oz? All right, moving right along here, sterling yen. Okay, a little bit trickier of a play, but nonetheless, 177.52, the major support barrier that we were looking at. This was a near-term bullish invalidation. We highlighted this region yesterday. You have that median line coming in just below. We came right into it, bounced off, and like all the other sterling crosses, that bounces in focus now. If we make it through resistance, you look for a broader near-term recovery. If it doesn't make it through resistance, you look for the break of that lows to maintain that downside bias. Remember, this is the broader formation that we're trading within. Okay, very clean median line formations here. Lower median line parallel, catching that low almost to the pip. There's also a basic 786 retracement of the advance off the lows that you made in February. Real clean bounce from that level. So there was the highlighted region that we put on the scalp yesterday. Okay, that's the near-term bullish invalidation. That trigger break that we were looking at, that same support structure has continued to hold. Just a little bit of an adjustment there. And here we are at near-term resistance, 178.30. So 178.30, Eileen, that you brought up the pivot earlier today, actually turns out to be the S1 monthly pivot. Aside from the S1 monthly pivot, it's that major 100% extension of the measured move, okay, of that high that we made, topping process that we made right here. Okay. Let me get you the reference point. I don't remember where that 100% came from. There it is. There it is. It's the head and shoulders measured objective. I'm sorry. 178.30, right? 178.30, and on the daily, 178.30 is the exact S1. Okay, so major level. You also have at 178 the 200-day moving average. So, you know, it's just something to be very, very cautious of. If we break above 78.30 near term, I'm very comfortable calling that my bearish invalidation. I would look to play the recovery back into those median lines. But as long as we stay below 178.30, guys, the scalp bias remains weighted to the downside. 60 hold here in momentum. If you get that trigger break, that's even more conviction to try to press the shorts. And, you know, I don't want to press the short into support. So the same question you guys asked earlier in the euro, you know, Philippe, would I take that long into the resistance? If we break the lows here, I'm not really interested in playing this range per se. I think this is going to get messy. Sterling yen, wider range scalp, and it's a yen cross. So for me, I'm already, you know, holding my nose when I'm trading these pairs. But in any event, that's the major key support we're looking for. Look for the U.S. range to clear this. That's what I'm doing. I'm not going to be very active in sterling yen today, probably. It's going to either need to be a break below 177.50 for me and a push through the bottom end of this, or a recovery back through 178.30, and then you have a nice 110 pips here, you know, to scalp the upside. Questions on sterling yen? A little bit shaky here, but the levels again super clean. It's just that we're at a major support, both from a daily structure, and again we're kind of squeezing between these levels, guys, right? So we have, you know, the big level coming into the week that we were talking about was 78.30. We've been dilly-dallying through that. You have the 200-day moving average. You have that trend line support. Okay, let me take this back for you. That dates back to the lows that you made here in 2012. You could probably adjust that just a tad. Okay, and we're just compressing into this corner. Something's going to give. Something's going to give. These are the same exact levels we're looking at on the scalp chart. 178.30 on the upside, a pop here. You look for that rally. Again, 179, 179 change. Downside break below this key support barrier. On the daily, there's really nothing until like 176.30, but realistically, the scalp chart has nice loaded targets to the downside. Initially, 176.60 would be a nice 88.6 retracement of that rally. So, you know, in my opinion, it's probably just best to sit out this range, let that thing, you know, let that thing compress into the corner and give us some sort of breakout before trying to press it. You know, odds are you get a nice decent break with a trigger on that range. So may not be prompted for movement just yet. Obviously, you know, a short off of 78.30 right now looks pretty damn good, but that's the invalidation level for the short side of the trade. Questions on sterling yen? Let's take a quick look back at that euro trade still in play. Just tested that again, the London high that we just made. Looks like we're going to hold here. Momentum back into that resistance trigger, held. Looks pretty good, guys. No change. Okay. Moving right along. The last setup on the intraday page, and has been for the last 3 weeks, our good old man Kiwi Dollar. A little bit of a faker here as well. You know, it's been a tight range, guys. This was the fake out that we saw last night. I wouldn't blame anyone here if they got faked out into a short on this position. The break of the, well, let me take a step back. The only reason, obviously, this break happened at 2:30 in the morning here in the U.S., so I was not around for this. But the only solace you would want to take in holding you out from taking a trade like this, guys, is that it's on the European Open. So you're just setting the European opening range, and this is why we sit out Philip, Eileen, and the guys who were asking earlier about the opening range. This is why we want to sit out that first hour, first 45 minutes of trading. We just want to let the market do what it's going to do. Okay, traders are just coming in, guys are just opening up their books on the desks. We kind of just want to see what range, what initial scalping range the market's setting. And on the open of Europe, this thing just tumbled, tested the lows for Asia, and then came right back. So if anything, had we maintained discipline and just waited for the opening range, this would have been the opening range. Let me bring up trade session indicator real quick. All right, and here is in green, the London Open. So this thing spilled right into the open. It set the opening range, or it tested that high, that swing high that we made for Tokyo. Then here was the break. So you didn't even get the break till later, and it was actually to the upside. Point being, the opening range, guys, is something that's there for us to help us offer clarity on the near-term price action. And it's sometimes on an open like Europe did last night, I might have gotten faked out on that real quick. But again, even the momentum signature, quick probe into 40, quick rebound, and then the trigger break to the upside should have taken you out either way. So stay attentive to what price action is doing in the near term, but certainly a faker here. The formation and the upward, the parallels we've been following here on Kiwi have been super clean. This is the first little, fake out that we get. So again, a quick zoom out here to remind you guys how clean this formation is. I'm sure you're sick of hearing me say it, but there it is. A downside break, that's no longer the focus at this point, guys. This median line is going to be the focus. So if you look at the intraday page, I kind of try to highlight it again last night. As long as we stay above that green line, you don't want to get excessively bearish here. Even if this thing turns around and gives us the breaks up 76.20, which is what we were talking about last night, this is going to be the target, okay, initially. Okay. And again, that comes in right ahead of that green line right there. So sort of a swing idea, possibly, if we hold that 2013 high. At the end of the day, the major key resistance near term I'm looking for is that fib confluence up higher at 77.30 for break, 77.33 or so. I'm sorry, 77.33. 786 confluence to the 1618. Not bad. Questions on the Kiwi Dollar? We're on the lookout for short triggers up here. Again, 830 range looks pretty clean so far. You can envision a scenario where the U.S. opening range sets up right into 87.83, or excuse me, 76.83, this level right here, and then you get a downside break with momentum, play a nice little range into 76.20. But this is still the level to beat, in my humble opinion. The 618, it's been a nice pivot in price over the last couple of days, and then that'll take you into the target down here. Objectively, 75.47 is just the weekly opening range low. Okay, so all the targets are super clean. We just need these momentum triggers and opening ranges to give us the proper conviction signals. So that, my friends, is Kiwi Dollar. All right. Last but not least, can't go anywhere without scoping out the dollar gold chart, the daily dollar gold chart. And I'm going to provide you with a gold chart every day, guys, just because I follow the trade religiously. Don't necessarily scalp it, but it's such a hot topic these days, and it's one of the major trades that on the commodity block that the markets are just completely obsessed with right now. So the top side objective, 1195, 1197, didn't quite hit yesterday. We're tagging it right now. Okay, this is a 2-hour chart. If you guys remember, I think we were looking at this yesterday in the webinar. We were looking at a really interesting structure that looks like this. Modify that guy. Got a little messy in overnight trade. Looked like it was going to break to the downside of that median barrier, but boom, we're right here again. Okay, so at this point, you want to use some caution on the long side of gold, sub 1200. You could get a little bit of a probe through this region. If we break 1206, 1207 is pretty big in my book. You're going to want to take a look at that region on the weekly chart. Nope, I'm lying. You want to continue to look at the daily chart. Okay, so 1206 is the March open or March reversal close day. So here's the March open, the first day of trade of March. We made an outside reversal candle off of resistance, a median line dating back to October. Okay, specifically October of 2013, right? And it's also been just a really nice pivot in price. It's actually the stretch lows that you made for September here and that swing high that you made in November. Long story short, you look at 1206, 1207 on a stretch to the upside here. Longs are at risk in this region. We just looked at that near-term chart. Again, it's never going to look really good on the daily, but you get the picture. The 2-hour chart's pretty clean here. Okay, so watch for resistance for gold here. Makes sense to see a possible gold peak here as the dollar index is testing support. All kind of fits together, right? So don't be surprised if we kind of cap out here, but at the end of the day, bullish or the bearish near-term invalidation is going to be a pop through the top side of this structure. In such a scenario, look for a stretch into 1206, 1207. Again, monthly open for gold. Just super clean, super clean. And again, the weekly chart has been something we've been watching for a while, right? This was huge last week. Outside weekly reversal off of key support and last year's low. Come on, right? Now we're coming back into that same trigger that has offered both long and shorts conviction, just below 50 as price on the near term heading into resistance. All right. Ongoing divergence in momentum. Equal highs, slightly lower high, slightly lower high, new extreme, new extreme, new extreme. Long side at risk here, just below 1200. Questions on gold? Any other commodities you guys want to look at? Haven't really been tracking silver as much, but I do want to take a quick look at that just because of what we talked about yesterday in the webinar, with that being, at a key near-term resistance as well. We're pressed, and we finally just made a complete tag of that 1618 at 1710. We talked about that yesterday. As gold testing that last near-term high as well. So they all look pretty good here. Again, I'm just going to bring your attention to that basic trendline resistance from the 2011 highs. It's pretty big in my eyes. And, same thing here, guys. The long side near term is going to be at risk just below this region. So don't get faked out. Momentum just testing 60 here. So if this is going to be a near-term recovery within the broader downtrend, you'd want to see momentum start to turn over at around these levels. Eileen says, I mostly watch the daily pivots on the short term. Right on. Again, Eileen, for pivots, actually, I like to use the longer-term pivots when they line up on the daily charts, but absolutely, there's a lot of people who actually scalp exclusively with pivots. You know where I stand on that, right? Thoughts for sterling dollar? We can definitely take a look at the British pound. Here's what the sterling's doing. Listen, at the end of the day, the weekly range is the only thing I'm looking at here. Here's your Sunday open. You made a Sunday high in Asia. You tested a Sunday low in Europe on Monday, and that's the range you've been holding. So for me, honestly, I just want to see this thing give out. I got no plays until that does. The compression break here did prompt a long trigger, which would have panned out pretty nice. The plays are there, guys. It's just that it's not in focus, right? Because we haven't gotten the conviction break like we did on sterling yen, like we did on sterling CAD, like we did on sterling Oz, right? Which all gave us a pretty compelling, just opening range break for the week. So 48.50 is the level I'm looking for a concrete break below. You haven't gotten it, so kind of on hold here. Here's what the daily looks like. There's a reason we took this off the intraday charts for this week, per se. On the back of the stretch move here that we made on FOMC, you expect to see kind of stuff like this in sterling. It's often called, guys, the professional trader's market. It's notorious for the throw over, for the break and reversal through support. And I don't want to steer you guys into a high-risk scalp. So on a trade like this, it's worth it just to be a little bit more prudent and just wait for the major key levels to break. The weekly looks pretty clear. Again, let me zoom this out so you can snap these levels. The trend lines will all move. Okay, we've had our play, guys. The sterling was beautiful. The breakdown was beautiful. The breakdown off the highs from even the March open here. Remember all these scalps pan out really, really well. I don't want to press it. I don't want to do anything here. If we cap 150 to the upside, sure, you're probably going to see this thing at 152 pretty damn quick. Right here, yeah, I just don't know. 148 is going to be the breaker for me to put me back on the short side. Otherwise, I think this thing could just really chop some people up. Objectively, looking at on the daily chart, as long as you stay above this pivot range, just as a point of reference, guys, you kind of don't want to get too bearish. Right, there's that 48.13. As long as you stay above this pivot range, a lot of times if you bring this into a line chart, you'll see it a lot clearer. Resistance, breakthrough, now you're catching the lower end of that bound as support. Kind of want to get through here to play the upside, or you kind of want to get out the underbelly here to play that dip into 47.80, 46.80, 46.79 here. So, Eileen, does that make sense? It says sterling dollar. I see it better now. Thanks. Yeah, more than well. It's definitely something we've been paying attention to the last 2 weeks. There's a reason I'm not really in focus right now. It's just let it pan out. Let it pan out. Interestingly enough, it's got a very healthy ATR for a dollar cross as far as what we've been seeing this week. Still putting in a 42 pip ATR here. So I'm sure it'll give us something. The event risk as far as the CPI, US CPI crossover, both of those event risks yesterday I thought were going to give us a more clear validation break of the weekly opening range, but it didn't happen. So we'll wait to see if we can get this break. Adrius says, Mike, please can you share the purpose of the pivot? Thanks. So Adrius, it's not really a big part of my strategy, and I don't want to spend too much time talking about it because I don't actually use it in practice on a regular basis. The pivot is a basic simple equation of the high, low. You're taking basically a basic equation of the market snapshot of a candle. So in my opinion, and again, I don't want to trash talk anyone who's using pivots. In my opinion, pivots are something that it's better suited really for equity markets. Just because you're really stressing the open and the close, and in FX, obviously it's a 24-hour market. Yes, we use 5 o'clock as the pinpoint standard here in New York, but that's not necessarily going to be a worldwide global standard per se. I don't know. It's just for me, it's something that tends to be a little bit more equity driven and tends to hold a little bit more emphasis in a market that has a concrete open and a concrete close. That being said, Adrius, for me a pivot becomes much more significant when it overlaps or converges on a technical feature I'm looking at, whether it's a moving average, whether it's a Fibonacci level, whether it's a basic trendline resistance or support. That's when a pivot overlap becomes much more important. Does that make sense, Adrius? I just want to know what you And Eileen knows. Oh, LOL, she's getting good. Thanks. Quick comment there for Eileen, getting some compliments from Adrius. Appreciate that, Adrius. You're more than welcome. The actual equation, by the way, if you just need to know it, it's the high plus the low plus the close divided by 3. It's just a very basic. It's just a very basic equation. But that's the reason I get a little bit shaky in FX, because the open, the close is not really emphasized as much in price action per se as much as it is, in equities and commodities and in markets that have concrete open and close. No worry, Eileen. Great questions, guys. Don't ever feel there's nothing off limits here. Any questions you have, definitely feel free to ask them. That's what we're here for. Thank you for that, GS. GS with a quick pivot point cheat sheet, sending it all out to here so you guys can click on that. Appreciate that, brother. All right, so guys, if there are no other questions, again, those are the highlighted setups that we'll be following. Keep your eyes on the open for U.S. and keep your eyes on that dollar. The euro is kind of just sitting. We're pretty much still unchanged on that position. We'll see how the U.S. open range looks so far. The opening range is 109.70. The opening range high is 110.14. Really clear cut. You see a downside break of that opening range into the 9:30 hour, guys. You want to hold on to those shorts. We'll be looking for those targets we noted earlier. Again, our stop is against the London high, which is now the U.S. opening range high. Pretty clean cut setup on that. Obviously, sterling CAD and the sterling bounces are going to be in primary focus as we head into the U.S. Open as well. And again, as far as the data is concerned, guys, Friday is going to be the real player with the U.S. GDP. A quick recap on what we're expecting, guys, from U.S. GDP on Friday. Okay, market expectations are for an upward revision to that ridiculous blowout number that we got for the fourth quarter of for annualized GDP of 2.2%. We're expecting that to be upward revised to 2.4%. Remember, this is the third read on fourth quarter GDP, so this is the final read. Personal consumption is supposed to uptick from 4.2% to 4.4%. Okay. And the University of Michigan sentiment is released a couple hours later. That's expected to pop up from 91.2 to 92.0. My point being, guys, on the back of where the dollar is, depending on where we head into Friday, we're at support. Dollar data hasn't been all that good. Obviously, CPI yesterday was a little bit weaker than expected. Durable goods today was horrible. If we get a strong print or the upward revision goes into 4.5% or something crazy on personal consumption, we've been focused on the health of the consumer on the back of those retail sales data that were really weak. So could fuel a near-term rally in the dollar. And in the same respect, with the dollar sitting at support, if that data comes in weaker than expected, we start slashing growth targets right after the Fed lowered their growth expectations, it could finally fuel that dollar correction. So we're a really, really, really major inflection point here, guys, for the dollar crosses in general, and we'll be watching this very closely as we get deeper into the week. We'll keep you updated on SB Squawk as far as when Jamie will be doing his midweek intraday, midweek webinar, rather. Excuse me. We'll see you back here tomorrow morning, 8:30, nice and bright and early, for the intraday webinar. Best of luck trading, guys, and we will see you tomorrow. Cheers. GS says, where's the Michael B. RSI cheat sheet? So, guys, there's a lot on the resource page. I do want to draw your attention to that, especially if you're newer to SB Trade Desk, guys. You're trying to get acclimated with our strategies. We will be updating. There's more to come on this, but certainly all the basics are here. The Scalp Overview webinar is up for your guys' request. This was a webinar we did a couple weeks ago where we really outlined the strategy. I would encourage you to go through that. RSI cheat sheet coming up, GS. You asked for it. You got it. Adria says, thanks. Great job. Some pips last night using your chart. I'm learning. Thanks so much for SB. Cheers, guys. I always appreciate the positive feedback. I will see you guys nice and early tomorrow morning. Have a great session. Cheers.